Hello again, this is Amy and Sarah, and we are here for part 2 of the F word, forbearance. Today we're going to talk a little bit about the government backside, so the FHA and VA veteran loans.
Yes. We saw significant people have both of these loans, both great products, but we did see more of an upturn of these types of loans. People that held these loans did have a higher rate of putting their loans into forbearance. So some of the guidelines are a little bit different for these compared to our last video where we talked about our conventional guidelines. For example, the FHA loan, which is a Federal Housing Association loan, how we've been seeing most of these loans get handled is most of the companies of the deferred amount, they are doing what we call as a loan modification, where they are actually adding the deferred balance to your current loan balance, recalculating your payment based off of where your current interest rate is, and you're required to make at minimum 3 payments to get that up to date. Most programs, if you're looking to take cash out, are going to be a 6-month period that you're going to have to make payments before you can do anything. The veteran VA loan has a little bit of a different requirement. They will not modify the loan. They will just have that balance kind of sitting. They will not recalculate your payment, but you have to completely exit forbearance, and you are required to make 6 consecutive payments before you can do anything with your loan of refinancing or even purchasing a home. The VA has a little bit stricter guidelines in regards to waiting periods for when you can actually refinance again. If you had refinanced or bought your home, they have a 210-day waiting period, so that's why that 6-month payment after you exit forbearance is a really hard stop for them, because they basically are thinking your loan is restarting its term, for better words, by doing that. So not that your options aren't limited, it's just a little bit different than our conventional loan with we had 3 payments. Here you're looking at somewhere between 3 and 6 that you're going to have to make before you can do something else, either purchase or refinance your home.
So are you basically paying those 3 payments, is it like a doubling up, or do they want it all up front?
No, they want 3 monthly payments. You cannot pay it in bulk. It has to be 3 monthly installments.
Okay.
In order for that to do, and again with the 6, it has to be 6 monthly installments. It cannot be one large chunk of change that totals the 6 monthly payments.
Okay. Wow. Okay.
Yeah.
And that means that they can't, basically, if they wanted to sell their home, they have to do all of that first if they decided to sell?
Ideally, that would be the ideal way to do it. If you did happen to sell your home and the loan is paid in full, then technically your forbearance has ended.
Okay.
Now, where it gets a little tricky is with your VA benefit. We do have that waiting period, so we have to time that a little bit differently. But in regards to FHA, if that loan is paid in full, then you can move quickly on buying a new house if you pay the loan in full, because that modification is considered to be paid in full at that point in time.
Okay. Wow. Well, that was very helpful.
Yeah.
Thank you. I learned something today. And I talk to Sarah about this all the time, so that's pretty cool.
Yeah.
So if you guys have any questions about forbearance, we have the last video, part 1. This is part 2. Definitely look into those. And then if you have any further questions, just go ahead and reach out to Sarah or myself, and we will get you more information regarding any of the forbearance situations.
And your specific scenario, because it'll be different for every single client.
Yeah, definitely. Well, thank you.
Welcome.
I love all the information you give us. We hope you will reach out, and we hope you have a great day.